Okay, guys, Monday morning, new week. Let's get into the stock charts, try to figure out where this thing's heading. Hopefully, I can put you guys on some winners and we avoid the big losses. All right, so here's what we got going on. NASDAQ futures just flagging out right now, just kind of watching these. This week really is all about the NASDAQ. And it's really all about the earnings report. We've got Apple. That's the largest company in the pretty much in the S&P 500. So that's going to be a mover. That should move the market, up or down. And so the market I don't think is going to do much until we get to some more. We need a catalyst basically. So we'll probably just chop around, until we get some of these earning reports out of the way. The Fed also is coming out this week. And, the Fed is not going to do anything, basically. They're just going to continue to say they're going to support, the economy. They're going to, keep pumping programs and money, and that's all that they're going to do. They can't raise rates, so ultimately the Fed's just going to keep rates at zero probably for the next 10 years, and that, or possibly longer, who knows. Until their rates most likely will, when rates rise, it's not going to be because the Fed raises them. It's going to be because the bond market is raising the rates by selling off. All right, so futures just flagging out. Here's your S&P 500 futures just flagging out. You can see just kind of flagging out here like this. Moving on to the Qs. So again, everything's about the Qs. Yeah, so I was looking for a continuation, but again, we're before earnings, so the market doesn't want to do anything, and I can easily see it getting back up to here, all the way up to, 262, 263. Maybe we get there tomorrow or Wednesday before earnings. Or another very high possibility is I don't think we're going to break this trend line in the Qs until you can see my trend line right here on the hourly chart that I've had this marked out. So this is your trend line, and we're just chopping around it right now. So I don't think we're going to break it until after earnings. So we could easily just grind along this trend line, just chopping down, moving up, just grinding along this trend line here. And then you get the earnings, and then you're either going to break with a big gap down or you're going to gap up. That's possible too. But I don't think the trend is going to get broken until after some of these big earnings reports comes out. But if we look at the bigger picture by kind of rolling out to the larger time frames, that's important. You can see we've got a bearish engulfing candle right here, or also an outside day. Which basically means that it traded through the previous day's range, both on the upside and the downside, and closed on the down. Closed lower than the previous day's range. And so that's an outside day. That's a reversal candle. This is a kickback rally right here. And this is your kickback rally. And then we're continuing down. So I think we get a big red candle this week. I don't know if we're going to, but the setup is there. The charts tell me that it's a good, clean setup for that to happen. So that's what I think happens. Again, we've got negative divergences across the board. And so the charts are set up to make a big green or big red candle down, breaking this trend. It'll probably come in the form of a gap down. Maybe it gaps down and sells off a little bit more, but I think that's going to play out. Again, this is it's just a micro call that I'm making, so I don't know if that's going to play out this week. The charts tell me it's probably set up for that. Doesn't mean it has to though. And then the S&P 500 moving through here. This thing, island cluster top right here that was negated, and now we're just kind of chopping a little bit. Nothing's going to happen. Nothing is going to happen until after these earnings reports. So we'll probably just continue to grind within this range, and then we'll get, these earnings out of the way, and we'll see what the market wants to do. I think it's set up to sell off again. So, ultimately a break of this 318. No, it's about 319. If I go to the hourly here, on the S&P 500, 319 is right there, and that's your gap from that island cluster top reversal. That's your gap. That's also where it's held support. You can see we held support right through here. And so I think and held it again actually right here. So if we break this 319, that's going to probably do the damage and set us up for the next trend. So we're watching that closely this week, see if that plays out. I do think, you can see that coming off the March lows, we've got this trend line now that we've established. Here's the lows. We held support here, and then we broke. So this can go either way, to be honest. If earnings on Apple come out good, they could do a back test. And if it does that back test of that trend line, look for it to maybe overshoot, but then fail ultimately and close the day pretty much right there at that trend line or maybe slightly lower. So that can play out. It could go that way, or we could just sell off. It could go either way, but ultimately we'll have to just watch. If it does a full back test and then fails and closes right there, then that's your objective area to be short. If it just rolls over, then I think you could probably, establish or add to shorts on a break of this 319. That's my opinion on this S&P 500. That's kind of the trade idea there. I got this is gold. Gold's obviously just been uptrending in it. This is gold bullion, just been in a nice clean uptrend. So I could continue. It looks a little toppy to me. I think gold's probably due for a pullback, but it's still uptrending. So we'll watch for this to either hold this support line or break it, and we'll just call that out when that happens. As of right now, it's just uptrending. Again, I don't think anything's happening until after earnings. Apple earnings. That's going to trigger the action in the market. I don't think we do anything. I don't think anything technically changes in the market until after Apple earnings. Got to point this one out. This is a long trade. I did enter a long here. Now you got to watch it, but the thing is, Philip Morris looks good, looks like it wants to break out. Here's what I see. Here's why I like it. If I roll out, let's look at the daily here. Show you guys. Big, this is a nice clean downtrend channel that's been in place really since 2017. So Philip Morris has been in a bear market really for a couple of years now. And that's that's the thing. A lot of the stocks and a lot of the market sectors have been in a bear market except for tech. And so this has been in a bear market for a while, just working its way lower. But as I zoom in, you can see here we overshot it. This is where it looked like it was going to break out, but it just couldn't get going, and then it recaptured and sold off impulsively all the way down to the lows. So that was your false breakout. Now we've recovered, and you can see what's happening here. This is interesting to me, and it's moving higher. But if I go to the hourly, this is what I like about it, why I think maybe this breakout sticks, and this is why I've gotten long this. You can see we ran up right to resistance right here the other day on Friday, and then it failed and sold off, but now we were right back there. So kind of a double tap. It's just tapping through this resistance, trying to break higher. So as of right now, it's broken higher. It's just right there at that level. So we'll see if this holds. If this can hold, a couple days, and we can hold some strength here, then this might be ready to break higher. Philip Morris might be ready to break higher and move, break out of this bear market. And economically, I think this makes sense because you can have the market sell off and have, Qs and everything sell off, but you can have some of these stocks like Philip Morris do really well. This is a vice stock. They sell cigarettes. And, if you're going into an economic hard times, people are going to smoke more. We saw that with Boston Beer. Here's Boston Beer and symbol SAM. They went up 25%, I think, on Friday when they reported earnings. And ultimately, just people are drinking a lot more with the the stay-at-home stuff, and there's the vices do better in hard times. A lot like bars actually do better in economic recessions. Obviously, if they're open, this is Pandemic's a little bit different, but ultimately, when there's recession, the vices do better. And so that's just a fundamental thing behind Philip Morris. But here's Boston Beer. You can see they, spiked higher. I kind of have that marked out. They spiked right into resistance right here. So something to look for. But going back to Philip Morris, looks like it wants to break out. So we'll just watch that. It might not want to do it today, but starting to build some energy to the upside. Daily volume doesn't look horrible. It's not breakout volume though. So if we get a breakout, then you should see that breakout volume to confirm that breakout. So until we see that volume, keep it light is what I'm trying to do. Let's look at Adobe. I haven't talked about this one for a while. I'm still short this stock. And here's what we got going on. Here's why it still is a good short. Ultimately, you've got a nice clean uptrend right here on the hourly chart. And so as I zoom in, you can see here's your impulsive breakdown. And that was basically your sell signal. Here's your back test. This market that I've noticed loves to backtest breakdown trend lines. Sometimes sometimes stocks or the indices won't backtest, but this market, because because it's been such a buy the dip mentality for the last 10, 11 years, I think that's what people do is they just buy the dip. You get people that don't realize it broke trend, they buy the dip, it creates the backtest. So this market loves to do backtests is what I've noticed. And so here's your back test on Adobe, and then here's the resumption of the sell-off. So although this has been kind of walking a little bit higher, you can see, we got the low here a little bit higher and then a little bit higher there. So it's just tightening a little bit. But I think we probably break to the downside, running down to it's about 409.50, 410, somewhere right in there, I think is the next target. So I'll probably look to take a little bit of profit right around there. But that's the trade there. So just chopping sideways and, almost a head and shoulders price action going on where you've got this, shoulder here. Here's a head and a shoulder. This right shoulder is not lined up with the left shoulder. So not quite a head and shoulders, but close. And so if we get a breakdown of this neckline right around here, then maybe that's going to set us in motion for a bigger move down. Again, nothing's going to happen until after Apple. All right, and I'm just kind of jumping all over the place because, we were just kind of waiting for the catalyst this week. So I think we're just going to continue to look at various sectors and trade ideas while we're waiting. XLF, this is interesting. We're starting to, here's the thing. I pointed out that this price action right here along this trend line is very weak. And just to show you why I didn't like it, here's the bottom of the March lows, and you sprung right off of that, running all the way from the low up to the high here of 35%. Then you came back down, tag support again right here, impulsively bouncing off that support, running all the way to the top here, another 33.5%. Then you came back down, hit support, and look, there's no more bounce off, impulsive spring off of that. It's just grinding along support for a while. So just grinding, and starting to break today. You can see as I zoom in, just starting to break. It's not impulsive. So, what this probably tells me is the trend line will break if it, it's going to go sideways, and then they're going to run up and do a back test up here somewhere. And then that might be your area, your objective area to get short. So we'll watch for that, but that's what it looks like it wants to do. So we're going to continue to watch this play out. Barrick Gold. So obviously gold and silver has been getting a lot of the headlines. And, this is when I start to not like something, when everyone else is jumping on board and it's just now being noticed. I've been talking about buying Barrick Gold for, over a year and a half, and the thing's up massively since then. But now you'll start to see all the mainstream, you're seeing a lot of reporting on gold and silver on CNBC now, and everybody's kind of catching on board. And so we look to fade that usually. Longer term, obviously still bullish gold because they're just destroying the dollar. But, you know, I think short term, maybe you got to wash out some of these weak hands. So here's what we got going on in Barrick Gold. Uptrend line right here. We're at the top of the range right there. We overshot it and it's since failed and come back in. So probably going to run down, tag the bottom of the support. My trend line keeps jumping around on me. Down here, which is, you know, depending on when we get there, maybe $28, something like that. And then we'll watch for what happens there. You know, if we break this uptrend line, then we will watch for some bigger targets. I think we've got, you know, $22, somewhere right around there. I'll tighten it up as things happen and as this looks like it wants to break. As of right now, I can't tell it wants to break yet, but still in an uptrend. It looks like we're going to head down to the bottom of this trend line or this channel, and then we'll see. So ultimately, this 28.20, if we break below that, then that would be a false breakout above this current resistance level. But we might find support here, so we'll just watch this. Agnico Eagle, this one's shot to the outside of the channel here. Here's your up channel, your upward price channel. We've gapped up above it, but usually when you get outside of price channels, you're going to fail and come back into the channel. So I think this thing probably works its way lower and ultimately tags the bottom of the channel here, potentially even breaking it. We're going to have to just watch this to see what's going on. But, you know, you can see on the hourly, we have negative divergence there. And the RSI does not have negative divergence. We burned through that. So we'll just watch this, see what's going on. You know, gold looks like it's due for a pullback, but we got to continue to just watch it. And here's the dollar. So the dollar, the main thing to look at, we'll look at the bigger picture, because the dollar, you got to understand the bigger picture. Here's your support line on the dollar going all the way back to 2011. So, you know, really your bull market support line in the dollar. And the dollar's been moving higher since 2011. And that's your support line. And we broke it. We broke it impulsively as well. This is a pretty impulsive breakdown on the daily chart of the dollar, but we're really oversold now. And so I think it's realistic that we get a kickback rally or a snapback to resistance, potentially even recover the resistance. It depends on what happens in the market. If you get a big sell-off in the market, there might be a rush to safety, and the dollar's one of the easiest ones that people rush to. So maybe the dollar, this was a false breakdown. It's very possible. We'll just have to see what the market does. But for now, the dollar has broken support. It is looking weak, so we have to continue to assume that it will continue to show weakness until we get something proven differently. But I would look for some sort of a kickback rally or snapback or something in order, and then look for what it does after that. If it kicks back to resistance and then starts to fail, then that tells you that this move is the real move. It's probably going to continue lower. But if it comes back and recovers this support, then could be a false breakdown. Ultimately, I don't know, but as of right now, it's weak. Let's look at this EA Sports. One of my subscribers pointed this one out. Thanks for that. I do appreciate that. And we're going to go ahead and look at this. So here's your daily chart. I was charting this out and looks good. Looks like a good short, really. Here's your daily chart. Nice clean uptrend channel. You've got several reactions. Reaction here. See the undercut or the wick. It's good to see when you have a wick, something that broke down and then recovered. That's good. Now, of course, I drew the trend line here. You could move it down to here. That's possible. So, you know, you have to, it's subjective, basically. Where you decide to draw the trend line can change or skew the outlook for the stock. So if you want to go benefit of the doubt, you could just move it down here to, you know, maybe about right there. And then that would give you the benefit of the doubt. But looks pretty weak to me, so we're going to have to watch this. Here's the hourly. You can see we've got, reaction here, reaction right there, reaction, a little cluster right in here that's kind of clinging to. And so we just wait for a big breakdown. That will, this is the benefit of the doubt trend line. So if it breaks down here, there's really nothing else you could say, is support, and we should continue lower. We do have negative divergence on the hourly here. And yep, you can see higher prices here with lower momentum. Well, it's about equal right there, but that's basically negative, where you have a higher price and equal or lower momentum there on the RSI. So negative divergence. And this divergence has actually been in play for a while, so it's been building. And if I go to the daily here, you can see negative divergence as well right there. So clearly momentum has been fading in this. Now we look for the sell signal. And, I marked the trend line here, I guess. I'll just leave it here for the benefit of the doubt. Better to be sure than get in a little bit early and not be sure. So I'd rather have a higher probability trade. So we'll wait for the sell signal. When you get the sell signal, then, yeah, that's what this is. This would be a short, in my opinion. And look for volume. We don't have volume there yet, so we don't have a breakdown. We don't have a sell signal. We don't have a breakdown volume. When you get that, that's your sell signal, and we'll just wait for that. This one looks good. SOXX semiconductors looks good for a short. We're doing a kickback rally right now, so it's actually pretty objective. Probably by the time I get the video out, it'll be a very clean objective area to short. But you can see here, trend line. We've been walking up this trend line really since April, and it's just been walking up the trend line. You can see the wicks, how it dipped below and it recovered it. Just kind of validates the trend line when you have lots of reactions, and then you see these false breakdowns. Just continues to validate the trend line, shakes anybody who was a bear who took that as a breakdown, got shooken out, and it just continues to validate the trend line. But now we got a nice clean breakdown, and it's stuck, so it's below the trend line support. So now that support should be resistance. Treat it as such is how you do it. And we're coming back up to do a back test today. So if it wants to run up and tag this 286.40, anywhere really in this area looks good to me. But 286.40 is obviously or 280, somewhere right in there. It's, within those pennies is the lowest risk objective area to start a short or add to a short. And so I started shorting this on Friday, and I'll probably look to add a little bit. I'm not jumping in all in shorts right now. I'm looking to kind of build some positions over a little bit of time as I continue to get more proof, and we should see it. But if we don't, I think it's important to not just completely load the boat. But this looks like a good area to potentially, add to shorts for a continuation to the downside. So nice clean breakdown, getting a back test. Look for a break to the downside to confirm that was a back test, and now we're going to resume downward. Okay, guys, that's all I got. Just kind of running through, random stocks and looking at different trade ideas. Again, we got to wait for these earnings this week and the Fed and see if the Fed does anything. I don't think the Fed's going to move the market unless they come out with some surprise stimulus or something. I just don't see them moving the market. They've done a lot, and I think they're probably just on hold until they get, until they're called back into action by the market selling off impulsively. So don't expect the Fed to just keep pumping the market higher. Expect the Fed to come out with more money printing and more stimulus when you get big sell-offs. They're going to try to keep the market up, but I don't think they're in the business of pumping the market higher, because if they continue to pump it higher, they just create a bigger potential downside that they ultimately can't stop. So I think they'd rather just stop the market from falling, a lot, but they won't be called into action until you get that big sell-off. So that's what I think the Fed's going to do. I think the earnings is the play this week. I think, Apple earnings, things like that, the big earning plays, those are the catalyst that's going to move the market this week. So just want to point that out. Leave me a thumbs up if you find the content valuable. If you guys are able to find success with this whole trading thing and charting thing, let me know. Leave a comment below. Catch you guys on the next one.